Hi, good morning, everyone. Welcome to this EM retirement planning session. Today, we're going to have three speakers. We're going to have each speaker speaking for about 25 minutes, and then we have 5 minutes of Q&A. If you have any questions, please type in the chat box so that we can get your questions. So first of all, I have to introduce myself. Of course, I'm Dr. T.W. Wong. I got this honor to be the chairman because I have retired, and that put me in the right position to chair this session. Okay, the first speaker that I'm going to introduce is very important because he is a finance consultant. Okay, Mr. Frederick Wong. His background is actually an engineer, and after some years in engineer work, he changed track to become a finance analyst. He worked at various places, and now he's having his own company. He has done many talks on financial management.
The topic is
so he's going to talk about financial planning for retirement. So can we now welcome Mr. Frederick Wong to speak?
Hi, morning. The topic is about the retirement planning. Thanks for invitation by ACEM, and thanks for Professor Lam and Dr. Yang's referral. Topics will include mainly the 3 points: the general concept of investment, the pitfalls or misconception of investment, and the emerging field. Today's topic is a bit challenging for me to finish this presentation in 20-something minutes, which is a lifelong journey and very critical for everyone. So I would like to start the presentation by there's no free lunch. So suppose that we need to upgrade our operating system, which is in our brain, to upgrade our ability and skill to make smart decision in asset allocation. So it's a big topic, and I think some of the idea may be quite new and will be quite a bit abstract for those people who have never heard that kind of concept before. So I try to make more examples to make the whole presentation more vivid. Okay. A brief introduction of myself. I start my career as an engineer, a semiconductor engineer. I worked there for around 10 years, including those companies in Taiwan, and also, and then I worked in the finance industry for 17 years, starting from a French investment bank, BNP Paribas, and then worked in hedge fund industry around 12 years. Okay, so, and I wrote around 5 investment books and about some about the application of neuroscience as well, and AI, artificial intelligence. So this chart can serve as a kind of the reference how to change or how to acquire a new skill set. From my own experience, I start from as an engineering school graduates, and then I worked in the industry, in the semiconductor industry for a decade, and then I studied CFA and became an equity analyst, and then become a hedge fund analyst, and then a hedge fund manager. So this is the way to expand the horizon, to expand the coverage, expand the dimensions. And my name card for reference, our office is in Central for many years, for around 12 years. Yeah. Other topics I have conducted before, including in CFA Society Hong Kong and for the SFC or for other investor education center and other organization. Some of the presentation already uploaded in my YouTube channel, so feel free to visit that channel if you like. Some major takeaway. At this point of time, I'm still relatively bearish on the market, especially Hong Kong market. Since in general macro view, for a quite long time, of quite long period of time. Second one is in order to have a smarter asset allocation, we need to upgrade our dimension, to upgrade our view, upgrade our ability to access the market. So the third point is the easier point to don't buy derivative and just like structured product that you don't really understand, or you look at it from a low dimensional angle, then it's extremely dangerous. Portfolio construction, there's a lot of criteria or parameter, but I list out some most important area that everybody should heard this before. Liquidity need means the time, how much cash flow you need, and the time horizon, how many years after retirement, or how to preserve your capital, or you want to create more wealth through the investment, which is extremely tough for. But I will explain later. So the key part is to make this. If you like, you prefer the preservation of capital approach, then you better choose the asset class or the assets which is uncorrelated to each other or even negatively correlated. For example, those reverse ETF or those currencies sometimes are uncorrelated, less correlated assets. That would be a good choice to construct a stable portfolio. If all your asset class are on the same direction, so that means the portfolio will be extremely volatile according to the macro situation. When it goes up, you are very happy to see it going up together. But when the market goes down, it goes down together as well. So extremely volatile. Most of us, most of our friends, learn investment not through a traditional way or classical way, but it doesn't mean that you really can earn more money if you acquire some professional skill. It's not necessary. It's some sort of necessary but not sufficient. But most of people spend a lot of time reading newspaper, magazine, TV, radio, including me, myself, many years ago, technical analysis, the chart, and overheard enough tips from our friends. But are they really useful in the past decades? I think everybody have spent a lot of time here, but just to remind yourself whether those are really useful. This is the most typical pyramid or the triangle talking about asset allocation. Salesmen maybe in the account manager title or the relationship manager title from some sort of a grand company will always suggest you to buy some product which you are very suitable for buying this product, and this just like this product is tailor-made for you, and with 8% interest rate, annual interest rate, and then if we borrow the money, if you borrow the money from us, from the bank, then you can leverage your position to double, maybe the LTV is 50% or blah, blah, and then you, so just like a property bond, just like a Lehman mini bond, or just like accumulator, ERN, ERI, and a lot of salesmen has been selling those products to you every week, every month, to say that this product is very suitable for you, cater for your need, right? But we seldom look it from another perspective, which is from a higher dimension point of view, where why this product comes to me, why, who is making the money, and how the whole ecosystem works, instead of using a single dimension to look at this product. So to some extent, to understand the market, understand the ecosystem, to understand the asset allocation methodology, we better understand ourselves. When we understand ourselves more, we understand other people more. When we understand other people more, if the number of people or the types of people are big enough, then we understand the market more. So spend more time to decode ourselves, to decode how human react on the investment product, how human react on those breaking news. It helps us to understand the market much more than before. There's 4 types of investor in my view. C means convergence of time, convergence of space. That is the first one. And the second one is divergence of time, but convergence of space. I can explain to you this later, but due to time constraint, I cannot elaborate one by one. But to my experience, investor only divided into these 4 major categories, especially those not fully aware the system. In short, our left prefrontal cortex, the left prefrontal cortex looks like an Intel CPU plus the NAND flash memory, non-volatile memory, and the right prefrontal cortex is like a GPU, which is the NVIDIA and the NAND flash. In the subcortical region of our brain, which includes the limbic system, thalamus, amygdala, or hypothalamus, and hippocampus. The middle part of the brain, I think just like the famous book called Thinking Fast and Slow. The system 1 is the subcortical region. System 2 is the prefrontal cortex. Most of the time, investors use the system 1 to draw a short conclusion of the breaking news and action. This is the way that the market react on the breaking news, including most of the people. How to build our expertise, training, how to train our skill, the asset class, is to increase the skill and lower the percentage of the influence by the lucky factor. So if you're a primary school student, then maybe there's luck maybe the majority. And if a professor, you have more knowledge and wisdom, then you try to your skill set will be more much higher weighting than the luck. Then in long run, you will win from the game. So it's to build a holistic analysis, a holistic portfolio management, instead of just listening to the tips or a a simple amoeba types of investment methodology. Since most of the audience here are doctors, senior medical doctors, or some retired doctors, so I guess most of you spend a lot of time in the medical research or reading a lot of reading a lot of journal during your life, and you have been very successful and accumulated a lot of wealth in past decades. But when it comes to investment, to deploy your wealth, deploy your cash, it seems that the time is not very proportional when comparing the time for you to accumulate the wealth and the time for you to spend the money to invest. So what I want to bring to you is that we may need to spend more time in learning the financial world, how the financial world works, so that we can allocate the resources, the accumulated wealth in a smarter way. So from information, knowledge, some experience. So it is different dimension, right? Information is the lower dimension, the lowest dimension, and the knowledge and the experience and strategy. Yeah. So I mean, from 1D to 2D to 3D is from amoeba to sheep and to sheep herd. So from sheep herd's angle, they are diverting those sheep instead of following the oasis or whatever. I think in most of the case, those people in TV or in media will talk about technology is future and we need to invest in technology stocks. That seems to be a slogan or seems to be some easy to understand narrative, but actually investment is not that easy. It's full of traps. So, for example, if you invest in Tencent, Alibaba, or other, it depends on the timing that you invest. It's not always it's not a case that you always make money by just passive investment or monthly installment or blah blah blah. It's not that case. So it's about timing. It's all about timing. In long run, because inflation and because of the characteristic of very long run, the share price or the asset price goes up, but it collapses in some when the bubble go bust. So a boom bust cycle, as mentioned all the time by George Soros. But it's easy to fall into the trap to buy accumulator, ELN, ELI, Lehman. You to some extent you can make money from this kind of asset, but the odds are not fair. Not fair. They hide the odds inside the sophisticated structured product, and to sell one part of it to the institutional investor, and the other part sell to in most of the time sell through the private banking, the wealth management to their clients, and the investment bank or the structured product team making the money, making the close to a risk-free return from that. And a lot of salesmen will say that, this product is very suitable for you, tailor-made for you. You are very lucky that this product extremely suitable for you. That kind of so after the Chinese properties, U.S. dollar bond, as you know that today a lot of bond already, some of the bond already default, and some of the bond already go far below their par value. So it saves me a lot of time to explain what is behind. So the odds is not that attractive actually. So we focus on the paradigm shift and the structural change instead of very detailed. We don't need to go into very detail about each asset. What are they doing? And it's not about the detail. It's about the structure and the structural change. How the structure is changing is more important. But it takes maybe 3 hours to explain. So in case you are interested, can visit my YouTube channel. So today I would like to share with you my. So that's why I always call dimension upgrade. Instead of seeing the things in different scale or magnitude, it's better to see from different angle. But different angles still not enough. Is actually to increase the axis, the XY axis, to increase one more axis. As long as you increase one more axis, then you see things much better than others. For the lowest dimension, the good company equal to good stock, which is wrong, right? Good industry. So we need to stretch the time axis and space axis to a holistic way. I guess most of you have watched or some of you already watched the Squid Game in Netflix, right? There's one of the game is called the Tug of War. There's both sides. Maybe here is seven guy. There's another 7 guy or 8 guys on the other side. They pull the rope, and then see who will win. I think in investment, most of the time, we are predicting who are the winner, and once you predicted the winner, you put the bet on it, and you need to switch very quickly if once you found you are wrong. So investment to some extent very similar to this kind of Tug of War in concept ways. It's not about technology is future, then we buy the blue chip stocks, and then we enjoy the growth every year. Not that simple. There's no free lunch, and there's not so easy to invest in. It's full of risk and full of traps, I think. So another way to explain it, that is just like 2 prisoners living in prison. One of it just see what he saw, and the other one can imagine and can think of something out of the box, can think of something outside. Maybe he's not totally right, but he tried to understand the world. Even his physical body was trapped in the prison. This is the attitude that I think no matter you are retired or you are training your investment skill, we should have that kind of. So derivative, as I mentioned again and again, accumulator, that or ERM, ERI, this kind of structural product are very sophisticated. And the key point is that the odds are not fair. When you're buying the stock, you see the spread, the price difference. But when you buy the structured product, it's extremely difficult for you to find out the spread, and which is the spread much bigger. So and the salesman say that it's suitable for you, it's tailor-made for you, it's catered for your need. Instead, you need to think who is winning from the game, who is the game sector. I think so. The odds are not good. Just like going to a casino, you buy triple six, triple five. The chance is very low. When the chance came out, actually the odds are still lower. So when you play many times, accumulator, just like you bet the rare case will not appear, and you collect a tiny of money, and once after many times the odds is not fair. It's in, but a lot of people will still go into that. So the emerging market, emerging technology, I think for secondary market will be AI and fintech, and for the primary market will be biotech and healthcare. Yeah, and leave your comfort zone. It's not, if that kind of sector is not your familiar one, spend some time, and it's a long way to go. It's not that easy to explain or to make a decision quickly. It's very dangerous. It's not that straightforward. So today I covered these three topics in my presentation. And the key way is to upgrade the dimension and don't buy derivative unless you master those knowledge very well. Dimension upgrade is the most important. It's not only viewing things from different angle, it's from another dimension. This is the way to continue to outperform or to win in the market instead of following the pyramid or just putting the money there. But when the market collapses, if those asset class are not negatively correlated or less correlated, then most of the asset price will go down together. That will hurt will hurt you very much, and that will reduce your wealth, your accumulated wealth in a big deal. So investment is a very challenging task and challenge, but it can provide a lot of upside. But that upside requires to upgrade your dimension, to understand yourself, understand the world, understand the market, understand people more by neuroscience. My approach is by using the neuroscience approach. And I've a lot of YouTube program on my YouTube channel. Feel free to take a look in English, in Mandarin, and mainly in Cantonese. So this is my contact. Feel free to WhatsApp me or WeChat me in case any question or any additional information you or just add to introduce each other. Okay, I quickly go through my appendix as well. Okay, that's all. Thanks a lot for your invitation, and hope to see you again in near future. Thanks a lot.
Thank you, Fred, for the advice, especially point number 3, the derivatives. Now, we have some questions on the chat box. 2 are actually related. So first one, what is your thought on investing on cryptocurrencies such as Bitcoin or Bitcoin ETF? The other related question would be Ethereum. Bitcoin, is it going to be the product, the investing product for the next 10 to 20 years? So this is really hot. So what is your thoughts on these new cryptocurrencies and investing tool?
Yeah, I think Bitcoin or cryptocurrency is a very big topic, and a lot of people earn a lot of money in past few years or past 10 years. And to me, I'm not a big fan on crypto, or not an expert on crypto. I actually prefer AI more, which is more longer term, and artificial intelligence. But crypto is a good, is a quite emerging, developing very well, and even application in metaverse, blah blah blah. But be careful. There's a lot of narrative inside as well, and whether if you so I prefer to invest in those crypto related tools. For example, the mining companies or some of the IC semiconductor companies that relating to the cryptocurrency instead of directly investing in the crypto market. But of course, the most direct way is to invest in the crypto market. But it is extremely risky and suitable for different kind. You can treat it as a kind of the alternative asset. But bear in mind that this kind of asset gather the different group of people, and those people have different psychology quite different psychology with the stock market. So be careful of the quantum computer, because at the end of the day, the quantum computer will be the game changer of the crypto in maybe 10 years or I don't know, 5 years, 10 years, 20 years. It's difficult to say, yeah. But anyway, this is my. We do have some. Personally, I have some investment, but not our fund, not our hedge fund. Yeah.
Okay, let me see. Other questions. Now, one of the emphasis in your talk is to upgrade your dimension, right? And you mentioned also that there are so many things on the website, newspaper, magazines, and so on. So if someone wants to upgrade the dimension in terms of learning to invest, so what kind of books or website or YouTube channel, of course your channel is one of those, would you recommend, or how do we choose one that is suitable for our purpose? What would be your advice?
Yeah, very rare books or movie, or very rare, very few can upgrade dimension. Couples of the the movies are including the Westworld, the Dark, some sort of this kind can increase your dimension, increase the horizon. Totally different, but it's very so-called brain burning. You consume a lot of your brain energy. Then that kind of video, and this is one of the good book as well. The Thinking Fast and Slow, which is written by the Nobel Prize winner, and he actually wrote enough neuroscience application, but not exactly the neuroscience. But I think it's good chapter by chapter, and also some of the idea from him already incorporated in the CFA curriculum. So that's why I think starting from Thinking Fast and Slow, you can understand the behavioral finance, the psychology, and the investment. I think it's a good book. And video, I think I always suggest people to watch 2 videos. One is by one of them by Ray Dalio, is the How the Economic Machine Works. How the Economic Machine Works. It's around 45 minutes. I keep watching it once and once again, which is provide you a big picture. And the other one is I forgot the name of the. It's by Bill Ackman, the most handsome guy in one of the most handsome guy in Wall Street. Bill Ackman is about lemonade. You can search for lemonade. Lemonade. The soft drink to start business from scratch. Then you understand from the bottom up approach or how to run a business. And the other one is top down by Ray Dalio. So Ray Dalio is top down. Bill Ackman's video is bottom up. So you have a big picture and a detail, and you can understand how a business start from zero. And of course, you can also read my book as well. I have written a book on Amazon. It's called Bloody AI Alchemist. Bloody AI Alchemist is relating to the AI and mainly for the blood type as ABO blood type. And I deeply believe that it's heavily influencing our decision-making process. Yeah.
Thank you, Fred. I think if we are approaching retirement, we should have more time on our hands, and there are lots of books and things that we can do to upgrade our dimension, as suggested by Fred. Thank you once again, Fred.
Thank you.